Welcome to Price Action Real Traders. So today I'm going to show you how to identify engulfing zone. So this is part 3 on how to identify engulfing zone trading strategy in strong trend. So in the previous video I do part 1, part 2, this is part 3 on how to identify engulfing zone in strong trend. As I have told you, engulfing zone trading strategy has 3 concepts. It has touch the zone, it has close at the zone, and it has breakout. So if you have strong trend, you can trade the 3 concepts. So let's start now. So if you are in strong trend, as I have told you, if you are using EMA, it's easily to identify the strong trend, strong uptrend or strong downtrend. You can see the alignment of the EMA, so you can identify the strong trend based on EMA. Like now here, you see here is strong downtrend because of the EMA alignment. You see 200, you see 100, you see 50 and 20, and price is below the whole EMAs. So in this situation, it's easily to trade engulfing zone. So like here, you see this is the engulfing zone here. So as I have told you, if this candle touch this zone, you see these 2 candle engulf this green candle. So assuming this candle, this green candle touch here, then you can place put option. Then if market close here, touch here, or close here, or close inside here, then you can place put option. Like here now, as I have told you, there are some candles which if you see, you have to wait. Like here, you see this candle is very strong candle, has no rejection from above, even though it closed inside. So you have to wait for the next candle. You see here, here is the zone from this green candle to the wick of this green candle. It is zone here. You see here is strong downtrend. After retracement, then this candle immediately engulf this green candle. So here is your zone. So if you see market touch or close here, you can place put option. If market close inside here, but this one close inside, no rejection, so you wait for the next candle. You see this is like pin back candle, then you place put option here. Then if market, you see market close exactly after this swing bar, market go up and close exactly here, then you place put option. If market break this zone, you place put option. Because why this one is green? Because of gap. I told you, if you see gap, you wait, don't place your trade. If you see any gap inside or outside, you wait. Most of the time, if you see gap, market will create one more candle before it reverse. So here you see, after this candle, you're supposed to place put option, but because of the gap. But if you can try to get marginal of safety, you can still win this weak candle. But if you see gap, just wait, then the next candle you place put option. You see breakout, after breakout you place put option. Close at the level, put option. Close again, put option. If market touch here, you place put option, because you have strong downtrend. Because if you have strong downtrend, if market creates strong downtrend, if you see retracement, immediately you see engulfing. So as soon as market turns back to this zone, market will reverse. If it goes up close, it will reverse again. If it breaks, it will reverse. So this is the movement of the market. Anytime try to identify. So let's check another one. Here you see here strong downtrend here, strong downtrend. You see here is the zone here. You see this is engulfing. As I have told you, you see market come down, up, immediately you see engulfing. You see here this is the zone, and here is the zone. You see immediately after engulfing, market retrace back. You see put option, then market go up. You understand? Here you're supposed to place put option, but because of small gap up here, as I have told you, if you see gap, don't place your trade. And this is low volume market. Let me show you. You see gap, small gap up here, another gap up here. So after gap, you see market reverse. So this is the way you will identify. Anytime you see gap, don't place your trade, because market will create one more candle. You see gap here. After this candle close, you see little bit gap, you wait. You see another gap, you wait. You see after this candle, market reverse, because here is the zone. Here is the zone. So if market break this zone, it will reverse again. So this is the way that you will identify in strong trend. You see market has not break, but if market break this level, this zone, market will reverse. You see here, let me draw so that you will see it very well. You see here is the zone. From here to here, this is your zone. To this area, this is the zone here. So you see the movement of the market is like this. You see market come down, retracement, immediately you see engulfing. When market retrace back, put option. Market close inside, put option. But if you see gap, don't place. Gap, don't place. You see market no gap here, put option. You see, then if markets go up again here, you place put option, but you see gap down, then market will create another candle, then you see put option. So this is the way that you will trade engulfing zone in strong trend. You trade touch, you trade close, you trade breakout. You have three options if you have strong trend. If you have strong trend, you have three options. You see here, do you see any engulfing? Yes, there's engulfing. These two candle engulf this green candle. So you draw like this. You see market come down, you see up, immediately see engulfing, then you draw like this at this week. Sorry, you see downtrend, retracement, engulfing, then you draw like this here. You see, if you draw like this, then you draw with this week as well. So the whole area here is your zone. Then you see market comes, you see market retrace back here. You see, if you can be able to get good marginal of safety, you can place put option here. Then market close here, put option here. Then market comes back, you see, you're supposed to place put option here, but you see gap. Anytime I told you, if you see gap, don't place your trade. You see gap here, gap up, then you wait. Immediately after breakout, you place put option. Very, very simple. You see, very, very simple strategy, and it works almost 90% all the time. It's hardly to fail if you can identify very, very well here. So let's see the uptrend here. Here is strong uptrend. You see strong uptrend here. You see here, this is the uptrend, retracement. Immediately you see engulfing here. Then you draw like this week here. Let me draw with this one so that it will be straight. See here, you draw like this red and the bottom of this green, so the whole area is your zone. Then you wait for market to come to this level, but you see here, as I have told you, you see market come, you see gap up, you see it didn't reverse, you see another gap up, market didn't reverse. So after this, I told you, if you see spinning top and the hammer, wait for the next candle. You see spinning top, you see hammer candlestick, then the next candle, market reverse. Definitely market must reverse. But here you're supposed to place call option here, but this candle, no rejection, no strong rejection, and you see gap up. I told you, anytime try to see gap up, gap down, don't place your trade. You see here, immediately you see gap, then you see another gap, then this is hammer and spinning top. You wait for the next candle. You see immediately after next candle, market reverse. After breakout of the zone, if you see gap inside the zone, market will not reverse. Gap up or gap down, wait. Spinning top, hammer, wait. Hammer, spinning top, wait for the next candle. Then you place your trade. Very, very simple. If you can identify this type of candles and the gap up, so it will not fail you. This strategy is very, very simple. It's hard to fail. So here, see here, this is, let's check another one. You see here, even though this is low volume market, but this is the zone. You see, you draw this tail of this candle, then you draw the opening price of this candle. You see market, you see here uptrend, retracement, immediately you see engulfing, market go up. Then here is your zone. Then you wait for market to come to this zone. Then you check which type of candle at the zone. You check, you have to check very well, but market not yet reached the zone. Yes, market has not yet reached the zone. Let's check another one. Let's check. So let me show you the effect of gap. You see here, you see gap, you see gap, you see here, here is your zone, and here as well. Then you see market, you see uptrend, even though this one is not very strong. If you can see the alignment of the EMA, the 200 is almost crossing. It's not very strong one, but it can work as well because it's above all EMAs. But the strong one is, you have to check the alignment of the EMA. 200 must be down, 100 followed by 100, followed by 50, followed by 20. Then the price should be above all the EMAs. But here still, if you are very perfect, if you know it very well, you can still trade this one, but only you have to be careful. You see here, this is the uptrend, retracement, then uptrend. Then here market, you see gap here, you see another gap, then market break the level, reverse. If you see gap, don't place your trade. Yes. So let's check the strong one. Strong one is better. If you see the alignment of EMA clearly, it's more better. It's very, very simple. So let me check another pair. You see here, even though here, but from here it's not nice. This one, you see here. Yes, here you see, this is the alignment of the EMA up. Then you see here, even though it's low volume, if you have low volume market, be careful. Here is engulfing zone, and this wicks here, because you see here market go up, retracement up, retracement, immediately you see this, how many, 1 2 3 candles engulf this red candle. Then you draw here, you draw this zone like this. Then if you see market close inside, you see, you place call option here. Then you see, I have told you, anytime you see gap, don't place your trade. You see here, you see gap up here, market come down. You see another gap, small little bit gap, market come down. And this is spinning top, another spinning top here, because it has the same lower and the upper shadow. Then here, then the next candle you can place your trade. You see here is another gap, you see gap here. Then this one you can place your trade, call option. So let's check. But if you have low volume market, be careful. Low volume market is not good market. All the time it fails sometimes. Try to get healthy candles, good volume market. You know, this time around all the market is bad. So if you have bad market, just don't trade. Just try to get good healthy market, then you can be able to trade very well. You see here, this is healthy. This is here, you see this area, you can draw here, this one here, and here, and this area here. You see, this is the engulfing zone here, because see uptrend retracement, immediately you see engulfing. These two candles engulf this red candle. Then you wait for market. You see market come to close at this zone, you place call option here. You see market come again, call. After breakout, even though it's very, very weak, you see, call. So this is the way that you'll trade engulfing zone trading strategy. Let's check another one. All the market is bad most of the time in this time around. So if you see bad markets, don't trade. See, most of the time it's in strong downtrend. You see here, even though this is bad market, this is very, very bad, but you can still trade if you can identify very well. Here, just draw this, draw here, then you draw here. You see here, you see, draw here, you draw here. Then you try to wait. because here you see the alignment of EMA 200, 100, 50, 20, price above 20. Then here you see engulfing by market movement, you see up down, immediately you see engulfing, market engulf this. So this zone is very strong. As you can see, market rejected, reverse. Then you see here market touch, rejects, you see reverse, touch, reject, reverse, close inside, reverse. You see market close inside, reverse. You see close again inside, reverse. You see close again inside, reverse, because this zone is very strong. You see here immediately you see engulfing. Then from here you can identify this engulfing zone is strong, because you see strong rejection. Then market create green candle. Then market you see come down here, then reject. Then you see call. Market come down again, reject, you see call. Market come down, close inside, you see call. Market come again, close inside, you see call. So this zone is very, very strong, even though the market you see has wicks. So you have to try to check the market condition. As I have promised that I will try to do video about market condition, which type of market to place your trade, but try not place if you see gap up or gap down or spinning top or hammer or marubuzo candle. All of them, they are continuation most of the time, so it will not work most of the time. So far you can identify those candles and the gap. This strategy will work for you. It will work for you. Here you see this is engulfing. Here you see, here you see, here you see engulfing immediately, and you see the alignment of the EMA. Then you draw here, you draw here, then you draw at the bottom of the wick here. You see here, you see market come down, you see gap down. That's why market go down. After breakout you see call, you see another breakout, call, another breakout, call. So this zone is very strong zone. So if you can identify, you can trade how many, if you know run, especially if you know running candle. If you know running candle, it will be very, very easier for you to trade. If you know how to read running candle, so it's very, very simple for you to trade. You can trade as many times as possible in one zone if you know running candle. You see here, here is another strong uptrend here. 200, 100, sorry, 200, 100 is 50, 20. The price is above. Then you see market, you see engulfing here. This 1, 2, 3, 4 candles engulf this green candle. Then you see here, then you draw at this week, here. Then you draw at the bottom wick here. Then market, you see retracement, you see reverse. Market come back again, you see reverse. Then market come down again, you see reverse. Market come again, you see reverse. So you see, I told you, you can trade as many as possible if you know running candle. If you know how to read running candle here, you know it will reverse multiple times. You will not trade once. You can trade as many as possible. Here you will know this candle will reverse, you will know this candle will reverse, you will know this candle will reverse if you can read running candle. But if you don't know how to read the running candle, just try to trade one. once only. If you don't know how to read running candle, try to trade only once at a zone. Draw like this, and then like this here. Just if you see market close here, place call option, finish. Don't trade again if you don't know how to read the running candle. But if you know running candle, but you can trade like if you trade close at the zone, when market break you can trade as well. But if you don't know running, if you know running candle, you can trade as much as possible. As like this, you see market call. If market comes back from this red candle, you will know market will reverse, you can place. From this candle, you know market will reverse, you can place. From this candle, you know market will reverse, you can place your trade. From this red candle, you will know market will reverse, you can place your trade. If you know how to read running candle here as well. But if you don't know, just trade once, go and look another zone. You see breakout, you see reverse, or you wait for the breakout only. Trade inside the zone once, then trade breakout. If touch the zone works, you can trade touch the zone, then you can trade close at the zone, then you can trade breakout only if you don't know running candle. But if you know running candle, you can finish your trading in one zone, because sometimes one zone you can make 7 trades in one zone if you know running candle. But if you don't know, just trade touch, you can trade close, you can trade breakout only. Like here, you see here, well, this is not nice, too much wicks, just leave it. Let me show you very nice one which you can trade zone, you can trade touch, you can trade breakout, and you can trade close at once and finish your trading, finish your session immediately. Yes, like here, you see this one is very strong one. You see, sorry, here this is engulfing, and this one here is the zone. You see here, this is the zone here. So at this zone you can trade, sorry, you see here at this zone you can trade touch, you can trade close, you can trade breakouts. Here you see this, the alignment of the EMA, you see 200, 100, 50, 20. Price is above all EMS. So you see here uptrend, retracement, immediately you see engulfing here, then market you see touch, then you place call option, then you wait for market to close inside the zone. Like here, this one is another touch, don't trade. Here close inside the zone, you place call option, then you wait for the breakout. Here you see market go all the way down, breakout, then you place trade. If you don't know running candle, you can trade this one, sorry, you can trade this one, then you can trade this one, then you can trade this one as well if you don't know running candle. But if you know running candle, you can trade this one as well, you can trade this one, you can trade this one. So you can trade how many trades you can. If you know running candle, if you know running candle, you can trade 1, 2, 3, 4, 5, 6 in this zone. But if you don't know running candle, you can trade 1, you can trade, don't trade this one because this is touch again, this another touch, just trade 1 touch, then you can trade close inside, then you can trade breakout. You have 3 trades if you don't know running candle. But if you know running candle, you have almost 7 trades, because 1, 2, 3, 4, 5, 6. Yes, you have 6 trades here if you know running candle, but if you don't know running candle, you have 3 trades. So let's check another one. The video will be too long. Yes, here you see here you can see the movement of the market. Here you see up, market down, up, down, then immediately you see engulfing candle. So you draw here, you draw this zone, then you draw the wick here as well. So this is your zone. So now you try to wait for market. You see here I told you, if you see gap, you see here gap, market close exactly, but you see gap, don't place trade, wait for the next candle. You see market close inside, call here. You see here another call here, but why this one didn't work? As I have told you, gap, always try to see gap. If you can be able to identify gap, it's hardly to fail. You see here, you see this one, you see gap here, gap up, see another gap up, and you see another gap up, then you place call. After breakout, you see gap, don't place. Inside you see gap, don't place. Gap, don't place. Gap, don't place. Then after you see no gap here at this, then you place your trade call option after breakout. So if you don't know run, if you know run candle, you can still place this one and this one. But if you know running candle, you can place this and this. If you don't know, you place this one only, or this one. Even this one has gap, so don't place. You see it has little bit gap, but if you see green candle, then you place. Then here, if you know running, you can place here as well, and here. If you don't know running, you wait for the breakout. You see gap here, don't place. Gap here, don't place. Gap here, don't place. Then you place here. So it's very, very simple to trade engulfing zone strategy. So let me show you once more, then we finish the video because it's getting long. You see here, this is strong uptrend. You see the alignment of the EMA, 200, 100, 50, 20. The price is above all the EMAs, so you are in good condition to trade engulfing zone. So what are you going to do? Try to see engulfing, like here. You see this one, from this tail to this, from opening price to closing price. See the movement of the market here, up, retracement, up, retracement. Immediately you see engulfing, this candle engulf, then you draw here, then you see touch, call, touch, rejection, call, then you come down. Okay, market didn't come again, so you can trade only one time here, only one. You have only one opportunity here. Market, you see market touch here, rejection, then you place call. That's all. You have only one opportunity because market didn't come back again, because it was long time. You see still market come down, touch again, you see reverse after a long time, because I told you this strategy is very powerful. You see how many times market, but still reverse. You see market go all the way up, then come back to the zone. You see market You see market reject here. You see touch again. You see market touch with rejection. You see call. You see market close. You see call again, call. You see here call. You see, so you see still, you see it's active. You see rejection. You see market again touch close. You see close inside call, touch call. You see, so this strategy is very simple and it works all the time, most of the time 90% if you can identify. So this is the end of this video. Please, if you like my video, please comment, share. If you have any suggestion, please drop it in comment section. I'll say thank you. Bye bye.